Welcome to today's morning report on Wednesday, 5th of October with me, Richard Perry, market analyst at Handtech Markets. We've got a slightly corrective move today on these markets. We've had obviously strong gains yesterday, but Wall Street fell into the close, and you had some hawkish comments out from a couple of FOMC members, Jeffrey Lacker, who is generally considered to be hawkish anyway, but also Charles Evans, who is on much more on the dovish end of the scale, sort of suggesting that he would be fine with a rate hike in December. And both of these are non-voting members, but still that has given the dollar a boost. And just show you the dollar over the last few days has started to gain traction, really strongly pushing higher on the yields as well. 2-year strongly pushing higher, and also the 10-year. So really is gaining traction, and this dollar breakout that we've seen has been driven across a lot of these major markets that I look at. Certainly, obviously the big one being cable, but also the gold price breaking down, silver breaking down, and we're seeing some potential moves coming out as well in other markets. So some really strong, really significant impact that this move has had on the markets. Now obviously we're also seeing, as I said, the sterling weakness. Now the drop on cable to a 31-year low is sort of a combination of the dollar strength and sterling weakness, and that sterling weakness or cable weakness certainly isn't having an impact on the FTSE 100, which pushed out close to an all-time high yesterday. But certainly the markets are sort of reacting a little bit more with decisive moves into the final quarter of the year after a pretty sort of neutral sideways trading period that we had in Q3. We're starting to see some traction finally in Q4. So the forex markets today, generally speaking, are relatively settled, but there is a move higher on the euro, which has come on the back of just reports actually on Bloomberg that suggested that the ECB was sort of preparing potentially to taper asset purchases, and that has allowed the euro to rebound, and I'll talk about that in my chart appraisal in a bit. But that move has certainly allowed the euro to outperform slightly today. But generally speaking, we're looking out for the service sector data today. Now we've already had the sort of the European service sector data, where we had France services just missing on expectations and on the composite. Germany slightly beating, but on the composite only very slightly beating. But the Eurozone generally came in line with expectations on the services and also the composite. Now the main driver for sterling today could be the services PMI. Services PMI has been very strong. Strong rebound following on from the initial sort of post-Brexit decline on the PMI. We had certainly the PMI is much better, or was much better last month. Now the expectation is for 52 this month, so just slightly back from 52.9, but certainly still fairly positive in light of Brexit. Then we'll move into this afternoon and the US data. Now the ADP employment number is at 115. That's expected to come out at 166,000. So basically pretty much stable in terms of last month. The trade balance is expected to improve marginally to 39.3 on the deficit side. That's at 130. Then you've got at 3 o'clock all the data comes out. The factory orders, which are expected to month on month be minus 0.1%, so not a huge change from last month. But then the ISM non-manufacturing PMI. Now, obviously, we had that drop last month to the lowest level since 2010 or February 2010 on that ISM data. Now, this month we're expected to see the ISM non-manufacturing PMI just improve slightly. To 53.0. So how would that affect the chart? Well, it'd be still relatively subdued considering where it has been through 2014, 2015. So that wouldn't necessarily be all that great a number, but still it would be better than last month, and sort of may give the dollar a bit of support. Into the afternoon also, we've got at 3:30 the crude oil inventories, or the EIA oil inventories, let's just call it, because to be honest, the market is looking at across the crude oil stocks, the distillates, and also the gasoline stocks being the main drivers of volatility on oil. Now, crude oil stocks expected to come in at plus 2.4. Now, as I just showed you, the recent weeks, 4 in a row, have been on all surprisingly in an inventory drawdown. So the market continues to expect an inventory build, but last few weeks has been inventory drawdown, so that would be supportive if you got an inventory drawdown unexpectedly again. The gasoline stocks was drove a bit of volatility last week, so watch out for that. 0.8 million barrels on the plus side this week. So thank you very much for listening, and I'll sort of talk about my lucky 8 Trader of the Year competition stocks, instruments when I return. So I will wish you good luck in your trading, and I'll speak to you later. Thank you.